welcome to Trade Finance Talks TV. My name is Deepesh Patel, editor at Trade Finance Global. Now, the world is rapidly becoming more digital with the adoption of the Electronic Trade Documents Act in the UK and MLETR adoption close in France, Germany, Spain, Italy and the US. But with these advantages for electronic trade documents, we also need to be very mindful of emerging challenges. Data security and the safe transfer of data are really important topics in the international trade space in 2024. According to the UK government, 32% of British businesses experienced a data breach in 2023. And actually, if you break it down further, 70% of large British businesses experienced a data breach last year. So looking in the future of the industry in 2024, we really do have a huge opportunity to digitalize our documents and data, but we need to do it in a secure and safe way. So I'm really excited to be here on Trade Finance Talks TV with Dominic Broom, SVP of Working Capital Technology at Arqit, who's really going to help us break down this complex topic. Dominic, welcome to Trade Finance Talks.
Thank you, delighted to be here, Deepesh.
So Dominic, can you give us a brief overview? Who are you, where are you from, and what do you do?
So I'm SVP at Working Capital Technology at Arqit. As you said, I've worked in the financial services industry for roughly 30 years now.
Thank you very much. And obviously the key theme from both a transaction banking and a technology perspective for those trade techs involved in international trade, treasury and working capital has really been removing the paper, and there are lots of benefits for that. And I think it's probably fair to say if we look back at 2023, that was the key theme. Can you discuss what the Electronic Trade Documents Act, so it's an act now, not just a bill, and also the recently negotiated or the recently updated Digital Negotiable Instruments Act actually means for electronic trade documents?
Yeah, as we're aware, the physical supply chains have rapidly enhanced over the last 50 or so years, principally through the use of containerization. But for what I would call the financial supply chains and the paperwork that supports those physical trades of goods has largely been stuck in the late 19th century. And referring back to seminal bits of legislation, still very valid bits of legislation, such as the Bills of Exchange Act dating all the way back to 1882. What the ETDA has done is to bring all of that legislation and subsequent case law into the 21st century and enable us to start looking forward. And it heralds a new dawn for international trade by simplifying it and making it accessible for a broader range of buyers and suppliers, in short. And the legal recognition, that gets to the heart of the Act, the legal recognition of digital equivalents of those well-practiced and well-used forms of trade documentation is the key thing that it unlocks. And as you've referenced, it's not just happening here in the UK. That's a huge step forward, particularly given that about 60% of global trade is transacted under English law, heralding back from, I guess, when Britannia ruled the waves. But other countries are adopting similar legislation based on the model law for electronic transferable records, or MLETR, and as you said, Italy, France, United States in particular, and that's going to provide a common foundational legal framework for the interchange of these electronic documents.
Thank you very much, and I couldn't have summarized it better myself. But I guess I can take an even bigger step back, and perhaps more relevant to your role at BMI Mellon, etc., because it goes back to one of my favorite equations around the CCC, the cash conversion cycle. So CCC equals, what is it, DIO plus DSO minus DPO, days payable outstanding, and that really is the challenge being addressed by payables and receivables finance. I guess, taking a bit of a step back, how can we actually unlock working capital from outstanding receivables and payables, and can you talk about how that market is evolving largely through technology and legal reform?
No, absolutely. Well, I mean, you've summarised it perfectly. And in the context of digital, negotiable or finance instruments, these are absolutely transformative for businesses, and critically because instruments like promissory notes and bills of exchange are negotiable. They've historically been used more in the domain of documentary and structured trade, and in so are, have proven to be very robust, unconditional, and free from performance risk, and that's a critical point in terms of their use. But they've suffered from having to be used in cumbersome paper form up to now, and the atomic nature of digital instruments resolves that. And you say, well, what benefits does that bring? Well, for a corporate using negotiable instruments in digital form, there's a potential instant bottom line contribution that they can tap into in terms of making an early payment to a supplier by an anchor corporate can result in an annualized net benefit of anywhere between 1 and 6 to 7% of the cost of goods. I mean, that's quite a meaningful figure. It also use of these instruments allows for corporates to consider post-maturity financing, so preserving cash in hand, a significant benefit for many, but in a manner whereby that payment obligation remains seen as a trade payable. That's absolutely crucial. Just the pure cost efficiency of going digital. Research done by the ICC that we were delighted to have participated in estimates that going digital results in a cost saving of approximately 70% of a typical transaction cost. And last but by no means least, the time saving. If you're dealing with atomic digital instruments exchangeable in real time, you're typically shaving 10 to 12 days off a supply chain finance process, and that in the context of a end-to-end 60 or 90-day process is very meaningful.
Yeah, so I guess three big benefits. We mentioned the equation earlier, but I think we need to talk physics now, not mathematics. And I can't say physics is my forte, but I'm sure it's yours, because actually when we talk about data security, combating fraud is incredibly important, and it's certainly something that's on the rise at the moment. And consideration for fraud, i.e. fraudulent documents, but also cybersecurity are incredibly important, as we mentioned earlier. I guess given the increasing threat now of quantum computing, hacking, versus traditional data encryption methods, and I don't think AI has kind of helped that in the right way. How does Arqit's approach to data security provide a more robust solution for those digital documents? And might I also quote the section in the Electronic Documents Act around reliable systems?
Once again, you've hit the nail on the head, and those statistics that you referenced, Deepesh, in your intro were very, very stark. But let's begin with the premise that actually transacting as much trade is done today in paper form is by no means secure. And I'm sure your listeners and readers absolutely know of the multiple fraud cases that have arisen even in recent times, based around the fraudulent use of paper documents. But there is an imperative, there's a legal imperative, because it's there in the legislation that says that these systems need to be robust and reliable, and we absolutely welcome that. Arqit's a technology firm that specialises in data encryption and security. We've developed a world-leading symmetric key agreement platform that draws on the randomness of the laws of physics, as you were referencing just there. And we use that randomness to create encryption keys that keep safe data of governments, enterprises, and citizens. And since launching what we call our Network Secure solution in 2021, we've developed partnerships with government agencies and major cybersecurity businesses like Fortinet and Juniper. And what we're doing in Trade Secure is leveraging that technology at the instrument level, and we've developed highly secure versions of those instruments, prom notes and bills of exchange that we were referencing, that have those key ingredients in them, that they're securely transferable, yet all the time fully referenceable, providing those protection elements against fraud that you were referencing.
So why is it actually important to have that technology that can actually verify various facets, i.e. documents and permissibility, etc., within that supply chain financing process from start to finish, and how can businesses actually use that to their advantage?
Well, we've looked at this from an end user perspective in terms of, where we've begun. And by protecting the instrument's security using that encryption technology, we enable, as I said, that exchange of data, but following well-established transaction banking processes. In order to persuade both businesses and financial institutions lending against such tokenized or digital assets, we know that trust is absolutely key to adoption. So what our quantum technology does in the context of the legislation, it addresses all of those key elements of MLETR/ETDA, but it goes even further than those core gateway criteria such as system reliability, and it protects transaction data, and this is all about data plays at the end of the day, as it's transferred between the corporate and the financial institution, and thereby it prevents that information, that sometimes highly sensitive information, from spilling over into the public domain, being revealed both now and into the future. And delivering that form of, and to that standard of data security allows us to demonstrate that degree of reliability as people make the transition from paper to digital.
Thank you, Dominic. So how does TradeSecure's data security technology actually ensure some of the pieces you mentioned earlier, so safety, reliability of digital financial instruments, and yeah, I'm talking promissory notes, bills of exchange. I think the other piece here is the interoperability question, because not everyone is going to use Arqit's technology for everything. How do we ensure that these systems can actually interoperate with others?
Sure, and that's been at the heart of our thinking again from the start. And unfortunately, we've seen examples even as recently as the last few months where that failure to allow for interoperability between transaction banking systems have ultimately led to their failures and very limited adoption at the very least. So what we're doing is we're securing that data within the instrument. So to walk very quickly through a typical what we call the minting process, the creation of that highly secure tokenized asset, the data and the authorized signatories are uploaded through a quantum secure tunnel. That's a data tunnel protected by our technology, and then the minted instrument is locked with a unique digital key, thereby rendering it tamper-proof, and that key can only be exchanged between permissioned counterparties, and that's important because you have the ledger on which the core transaction data is visible. But the ledger doesn't give you access to the instrument itself. That's only done through that key exchange, again, as previously explained, those keys derived from the laws of physics, therefore being highly, highly secure. And that environment, that trusted environment, does not require participants to be onboarded to a permission system or network, hence the fully fledged interoperability that you were referencing. And our day job at Arqit is that data protection at an extraordinarily high level for governments, for military and critical infrastructure. So data management, data security is absolutely at the heart of our DNA, so to speak. And the principles around our design work have been led from that.
It sounds extremely sophisticated and somewhat futuristic, but actually, why don't we compare what this process is, so the process you've just described, with the current invoice financing process that typical, let's say, a British corporate might undergo?
Sure. I mean, I think most businesses would realise that, regrettably, the supply chain finance solutions that exist today are not necessarily ideal. They're typically rather siloed, with corporates who have free cash using dynamic discounting programs to make early supplier payments using internal sources of funds. An excellent policy to follow if one has got free cash. But external liquidity has typically been provided separately by banks or financial institutions that are less willing, in most cases, to take on the perceived operating and particularly KYC costs of all but the largest suppliers. So that leaves small businesses in particular overlooked. Hence the trade finance gap, which has reached an extraordinary $2.5 trillion this year. Furthermore, most supply chains, and this comes down to actually the principles of cost management, are funded from the weakest link in the chain, usually those smaller suppliers with the tightest balance sheets, needing and availing of the finance first as they begin the supply chain process, and with the finance then filtering upwards, and consequently across long supply chains in particular, often those involving negotiated payment terms and deferred payments between buyers and sellers, that places significant strain and an additional cost on even the best businesses' working capital. Now, the ETDA offers the opportunity to transform that, breaking down those funding silos and improving cash flows, but what we call inverting the trade finance pyramid, providing supply chain finance from the strongest link in the chain downwards, and thereby stripping out cost.
Interesting, inverting the pyramid. I like that. I guess fast forwarding, 2024 has been touted the year of distribution. Is there a play here where trade secures technology can actually help with trade risk distribution, hence actually addressing that trade finance gap from the supply chain finance, tier 2 and below suppliers?
Absolutely. So DNI's Digital Negotiable Instruments Act has a binding irrevocable promise of payment by a corporate. And importantly for banks and non-bank financial institutions funding supply chains, this acts as a risk transfer mechanism, allowing lending to be based purely on the credit standing of the corporate buyer. And the performance risk of the so-called weaker links in the supply chain that we were referencing earlier doesn't need to be brought into the equation, and that enables financial institutions to provide funding that starts with the strongest link and can seamlessly cascade down the supply chain. Instruments are negotiable, as we've been discussing, meaning that they can be transferred or endorsed, being the technical legal term, from one holder to another. And the atomic, secure nature in which we allow that endorsement to happen through that key exchange at Trade Secure means that transfers of tokenized assets can take place, and that opens up the marketplace to a much broader range of lenders and hence new pools of capital which can be deployed on a transactional basis.
Thank you very much, Dominic. So I can't wait to see the Trade Secure platform live, and I look forward to hearing more about the developments. I guess as we look forward to 2024, what's next on the agenda? What are the next steps? And if we have this interview in 12 months' time, what do you expect to look back and say, this is what we did?
Well, I hope to come back in 12 months' time and be able to talk about a broad range of transactions that have happened using tokenized or digital negotiable instruments. The industry is really poised for liftoff, both at the corporate level, support from government level here in the UK, being under the leadership of the Department of Business and Trade, and critically from business association level, the ICC, who I've been engaged with for many years now, have been really leading the charge here, alongside other industry associations like ITFA, who are really, as recently as earlier this week, showcasing activities that are going on with the industry and looking to develop that move forward. So in summary, government have done their bit, and 2023 could be seen to be the year of government. Now is the time for industry, businesses and financial institutions to engage, or frankly I think risk being left behind as the commercial world moves to a much more digital future.
Thank you very much, Dominic. That was Dominic Broom at Arqit talking to us on Trade Finance Talks TV. Thank you.